If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. We're going to talk here about some of these stocks that have been hit pretty hard. You'll notice here, this is the stock of Robinhood. You remember this is the where the kids can come in and buy their stocks cheaper. I don't know exactly what the site is. The hood is the thing, but I want to tell you here, we had one of our subscribers here had bought this on the pullback right here. And basically, when they called me, it was down about 10%. And I told them, I said, look, you better be really careful in here because this thing is looking like it wants to, have made a major top in here because they gave so much of it back. But I've lost so much money. Look how much money I made. I said, yeah, but you could lose it all. Well, anyway, the stock came down a little bit and then rallied up to a break-even point, which was right here. And that happened to be, wasn't even near a 382. And then they called me back and said, what should we do? And I said, when in doubt, get out. I said, look, it's not working. You're breaking even. You can't ask for more than that. Sure, you gave a lot of money back, but you're going to give a lot more money back if you don't do anything about it. And, of course, as of today, it would have given 93% of the high that we made back in here. So all I'm saying, folks, is when you're doing this, man, you don't know what's going to happen next, and you've got to protect your backside. Nobody else is going to do it for you. Remember, yesterday we had a gentleman on looking at MGNX. I thought it was Magnavox. I don't know what it was. But anyway, that stock is down 10% after making the ABCD yesterday. So, sometimes they work, sometimes they don't, but that's neither here nor there. Now let's talk just a tiny bit about something that not many people know much about, but it's in the news a lot, and that is the cryptocurrencies. And we've been following those for a very, very long time, and I wanted to bring up to your attention that same premise of what we're looking at when we're seeing these things happening. I'm going to use Coinbase as an example because that's the one I've been following, and I keep records of what it does. And folks, I have not placed a trade in a cryptocurrency. I really haven't. And so I just wanted to show you here. You had your first high come in here when it was open, okay, or the initial offering. Then you make the ABCD 382. Then you come down and you make a higher bottom here at the 78. Then you go up and make a big 78% level. And look what happens after that, folks. The bear market starts. You got a 382 right here. Then you make the ABCD pattern. You got a 382 right here, and then you come down and you have a 382 right here, and then you come down and you have a 382 right here. Folks, these are, I think they're valid, but I'm making a proposal today. I haven't told TFNN that, so maybe they'll be listening. Whether we can do this or not, I don't know, but the guy that I know that knows this stuff better than anybody and has said exactly what's been happening with this since the very beginning. He knew the top came in at 67,000, 68,000 in the Bitcoin, and what's happening now, he's been expecting, and I'm hoping to get him on the show, and we'll do a 3-hour live presentation on cryptocurrencies. We'll have to pay something for it, but I think it would be great. I heard an hour of it today, and that's why I'm bringing some of these to your attention, because he believes that this is a viable asset class. The trouble is that the government doesn't want too many people involved in it. They want to get total control over it. So that's what this area is about now. And if we're correct, the next target on this group will be Michael Saylor. Today's group, it was Sam Bankman-Fried. That's his name, Sam Bankman-Fried. And the banks fried him today. He lost 94% of his wealth today, folks, on one opening of the thing that he was in, FX, whatever it was. He happened to have all his eggs in one basket, and they all got cracked at the same time. So he's not even a billionaire. He's only got 800 million left. 2 more days he'll be working at McDonald's. But anyway, that's what you've got to do, is you've got to protect yourself. And I'm just hoping that we can get this thing together, because he thinks it's a great opportunity coming. And I don't know enough about it to even, I know the technical part. I can see the ABCDs and all of that stuff, but that's that's what we're watching. If you remember yesterday, folks, we were talking about the price of Apple, about how everybody was so excited about the price of Apple. And let's just take a look and see what's Apple doing right now. You'll see, there it is. Look at this. Look at this Apple. Look, just not looking very good at all. Look, it didn't even close higher yesterday after the market was really strong, with the Dow up 400, 500 points, and Apple happens to be in the Dow, and it's an expensive one. So let's remind ourselves something can happen that might surprise you, and this maybe might surprise a few people. To me, it looks like there's something underlying wrong with Apple. I don't know if it's supply, distribution, or whatever it happens to be, but it's just not acting right. Even look at the rally that we had, in the S&P and stuff, and the Dow Jones. I mean, the Dow Jones jumped 2,000 points, and this doggone thing didn't even move at all. That's not a good sign, so I'm saying that when you see these things, be really careful. Now, let's go back, and we'll go over to the area where the old hold on, that's the wrong one. Where we have our offices at TFNN there in St. Petersburg, Florida, and we want to bring up another one of the all-time favorites, and that is Disney. And I wanted to show you this one here, folks. Here is, if you like some of these patterns that we do, this will be one that you'll really like, I believe. Okay, now here's Disney, okay? And you can see here, news came out, something today that Mickey Mouse broke a foot or whatever it is. I don't know what the news was, but look at this. Huge gap into new low ground. Okay, now let's assume that you were in Disney just for a minute, just for kicks and giggles, okay? And what we're going to do is we're going to go back to one of my favorite things to do, and it's to look at short-term patterns. And what we're going to do now is we're going to look at Disney as it was yesterday. This would be the same thing that we're looking at in Coinbase and also in Robinhood. Look at this, a beautiful 382 retracement, folks. A, B, C, D yesterday. Da-da, da-da. Look at it. Boom. This was the first indication. Look how it closed. Oh, dear. That was the second indication that maybe there's something not right. So remember, it's not how much money you make, it's how much money you don't lose. And that's the whole key to what we're looking at here as we're looking at some of these charts today. So we're going to be watching some others here, of course, but those were the main ones that I wanted to get covered today to get it started. And as I said, my guest today will be wolftrader.com. Tomorrow is Tim Boss, and on Friday will be Stan Harley. That's on Veterans Day, and try to do something for the veterans, folks. We've got a big veterans hospital here that Sarah and I try to do some stuff for, with getting cookies and stuff down to them. They have a beautiful cafeteria, and we get to chat with some of the people. We've had several students that were patients there at the hospital that we were very proud to work with. Anyway, hey, we'll be right back. 877-927-6648. Billy.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of the NASDAQ on a short-term, I believe it is an hourly chart. You'll notice here that we rallied up to this 382 retracement. Now, we did get a little bit higher than that yesterday during that last spectacular blow-off. That was right about the time we were on the air yesterday when the S&P hit that 3365 area. It's turned out to be the high. We've dropped 70 handles from that level. So it's important that you can see this is nothing more than a several-day rally, little 4 or 5 day rally, and the market went really nowhere. I mean, so people don't talk about that. The reason why is they're looking at the Dow Jones Industrial Average, which, you know, that's just basically, there's just such a difference here. Just bring this up and show you again, because this is a price-weighted index. In other words, it's not cap-weighted. They don't take all the shares and multiply it by the price of the stock to get the capitalization. No, they only take the price of the stock, which is silly. But folks, the Dow Jones is owned by the Dow Jones family. And there were 2 people involved with it, and I don't remember exactly who owns it now, but it's owned. It's a private. Now I think it has it's listed, but it's controlled by one family. And you know, the real story behind this was back in 1982 when I went to the floor of the exchange to trade. The first person I met was Byron Tucker, and Byron Tucker was running the Goldman Sachs desk, which was also part of Leo Malamit's Delshire Capital. And so he had both of them he was running. He had about 10 girls and boys that were running. You know, they were the runners that did all that stuff. So they would put the orders in, and Byron was in charge of that. And what was happening in the background was he was working for Leo as much as he was for Goldman Sachs, and they knew it because they worked together, but they were trying to get the Dow Jones futures. That's where it was supposed to start because that was the most popular one at the time. You know, we didn't start trading the CME futures until April the 16th of 1982. The S&P started trading, but the Dow family didn't want to have anything to do with futures. They thought it was gambling. And so what Leo did, being as smart as he is, he went over to of course, he was one of the main people at the Merck. And he said, okay, to hell with it. We're going to do it ourselves with the CME. And then what they did is they told the NASDAQ folks to do it. And then the knife people in New York got wind of it, and they had knife futures for a long time, but they died a long, long time ago. There's just no interest in it. But so that's why the S&P and the NASDAQ and the Russell also came on board. I don't know when. That was much, much later. I hardly ever trade that one, but Russell is much better, but it's only, again, for small caps. So the one that runs the whole show is really the S&P 500. That's the big one. And remember, 66% of the stocks in the S&P 500 are basically controlled by three people: BlackRock, Vanguard, and State Street. They have, you can look it up, but that's exactly what they do. So that's why when you're trading against these people, you've got to remember, you've got to watch these algorithms that are out there, because they're really, they really do work, and you've got to pay very, very close attention to them. Now, what I do is, I basically, I like to find a pattern that I'm looking at, and if I can see that there's a chance that it might work, I'm going to do it. Whether it's a 15-minute, hourly, 4-hour, or daily, I'm going to take a shot at that, because that's what I'd like to see work. Now, yesterday with all the crazy stuff that was going on this week, we had a really beautiful pattern set up, and it was our trade of the day on Tuesday. Let's try that again on Monday, and that was to sell at the 382 retracement. This is no different than the one that we saw in the NASDAQ, and we saw it in Apple, and not Apple, but in Disney. They're everywhere. I mean, and the Coinbase, they're everywhere. But there's a perfect ABCD pattern right there at the 382 off of the high, and now we're down almost $5,000, folks. It's had hardly any rally at all. But even at that, if you'll take a look at what we teach here, and that is that the markets, they repeat over and over again with regularity that is just really, really quite amazing. And I'm going to bring that to your attention here in 1 second, if I can find it. And I know I did it, but I can't find it, and that makes me very, very unhappy. And where did I put that darn thing? Shut the front door and raise the rent. I can't find it. I must have lost it somewhere, but I'll find it eventually, and then I'll bring it up to you and show you what I'm watching right here. But I wanted to bring this attention to you, too, because this was the same thing. Oh, that's the wrong one. Boy, I'm really messing up here. Hold on just a second here. Okay, let's get back to gold and silver. All right, let's talk just a little bit about the gold and silver here, because we've got Shane coming up right now. And what I'm going to do now is I'm going to show you the chart of the silver as it's related to the euro. In other words, it's you buy the silver in euros, and you can see here that we're having this big move that we've seen in other things, because the euro has been a little bit weaker. You get more bangs for your buck, supposedly. I only deal with U.S. So these markets that we're seeing in gold and silver, folks, this is I think a major breakout. I really do, mainly because it's gone $100 an ounce as of today. It hit 17.26. The low is 17.18. So we rallied $100 an ounce, and we're due for a correction. And I'm going to see whether this correction is going to be a 382 or something a little different, but that's what we're watching here. I mean, these markets have had some tremendous volatility, and the U.S. dollar is not over yet, folks. The U.S. dollar is just the yen and also the dollar index are just making corrections, just like they're doing in the euro. Those are the ones that we're watching, because they give you a pretty good idea of what's happening. And if you look at this chart on the euro, you can see that we were most probably getting ready to see an ABCD correction this week because of this big, you can see the 135 pattern here. There's right at your 61% retracement of the low and 78% of this low, and that makes the ABCD pattern up in here, and we're almost there. That's up around the 102 level. So this is nothing more than a big ABCD correction in a bear market. And I think that's what we've just seen in the stock market too, irregardless of what the Dow Jones did, because the Dow Jones it's tradable, but you got to remember that you're dealing with something that is price weighted and not cap weighted. So about 7 stocks out of those 30 run the whole thing. You got Caterpillar, Disney, the insurance companies, health insurance companies and stuff, Goldman Sachs. I mean, those are the ones that run the whole thing. And if you follow those, that's going to tell you whether this market is going to explode to the upside because they were really pumping that Dow. Even on in big days down, the Dow would not move down. So anyway, we got Mr. Shane Smolian, the wolftrader.com is coming up next. And then tomorrow we will have Tim Boston. Friday we'll have Stan Harley. So stay tuned. And what we're going to do is take a little break here, pay a few bills. If you have any questions, it's 877-927-6648. So we'll be right back after we pay a couple of bills here for TFNN, which is Tom O'Brien's birthday, folks. So send him a nice present. Dom Perignon, I think, is on the list. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have the Wolf Trader himself on the line today, Shane Smolian. Shane, how are you doing today?
Is this Duke and Duke?
This is it, baby. 100 South Broad Street, Philadelphia, Pennsylvania, the home of the greatest elections in the world. What's up, pal?
You got it. You got it. Elections are on everybody's mind today, right? That's the big topic,
Not
right?
mine. I don't, Shane, I have to tell everybody, but, I had 17 people and different things that were on our ballot here in Tucson and in Arizona, and I was 0 for 17. So
okay.
I must be doing something wrong. And so I am going to become, instead of being a minor Republican, I'm going to become a creative realist. So I'm not sure what pattern that's going to be or what party that's going to be, but I'm standing aside and going back to Fibonacci 382. That's what I'm going to do.
Never lets you down.
No, sir. That pays my bills. Great. What's going on with the market? Where are we going from here, buddy?
All right. So I have S&P And if we have some time, I'll get into the FTX thing. There's a big astrological event that went on with that. So it's
great.
super, super interesting to talk about. I mean, it's actually crazy. So, but let's start with S&P because we haven't talked about this in a long time, and I've had a shift in my attitude on the S&P. So let's talk about this, and I'll tell you why I've changed my perspective here, and hopefully I can give some people some perspective on this, at least from my perspective. Okay, so here's my summary here. I think the S&P bear market may be over, guys. And, I was looking at this in mid-October. I was talking about this with subscribers. We covered our short position. We had a short position from last December. Now, on the futures, we covered that at 36.25. I had a SPY short. This was from 459.19 on December 21st of last year. And we covered that at 358.52. This was the longest short trade I've ever made in my life. There was 2 days where I got out and got back in to try to get a better price. And I said, you know what, forget it. I'm just going to stay short on this. And so the reason why we stayed short on this was because we were watching what the Fed was doing. So everything that I do, my central focus is based upon central banks. I do astro trading. I have trading systems. The Fed uses a trading system too. But the core of what we do is we look at what is going on with the Fed. So the Fed internals, one of the things that we track, had been in a sell since July the 6th. Now, some people may not know this, but I'm not really a bull or a bear. So everybody has heard me be bearish for so long that they must say, well, he's just bearish. Well, Larry, you remember in March of 2020, I came on and said, this is going to make new highs. And because I was looking at what the Fed was doing, right? So I was very bullish at that point. And then around July of 2021, I started to see a shift in what was going on. So the Fed internals went into a sell, and they just went back into a buy. Now, the Fed juice is another signal that we track. That went into a buy for the first time since February the 7th, 2022. So there has been a shift here. One of the things that made me take notice was what happened with the Bank of England. So they had this guilt operation where they came in and they rescued this pension fund, and then they gave an ultimatum. But the thing that really changed my perspective was it changed my assumptions of what is possible. And what I mean by that is, when you're making decisions, you have to take a set of assumptions and a prior distribution of outcomes, and you project that into the future. What happened here was we had a rate hike and quantitative easing in the same week. So what that means is that normally there's a cycle of the seasons, right? We have the summer, we have the fall, we have the winter, we have the spring, and usually the Fed follows a cycle like this, right? I mean, usually they raise rates, then they stop, and then they start cutting, and then they get to zero, and then they start QE. That's no longer the case. The Fed has told us now, or the Bank of England, that it's summer and winter in the same week. So what that means to me is that it's not safe to be short on this market because they can come at will now and start a QE operation. Larry, you talk about the bond markets all the time. What's a bigger market, the bond market or the stock market?
Oh, the bond market's many times bigger than the stock market.
Right. And so, right, exactly. So huge, right?
Yes.
So when we talk about people say, well, the Fed, they can't affect the markets. Larry, the next day, the long bond in the United States rallied 3 handles. Okay. The bond market, the one that's so big, that's so much bigger than the S&P, rallies 3 handles in a day because of this operation. The British pound kept going higher, 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 higher. Because of what? Because someone pressed a button on a computer and somebody started quantitative easing. So I'll be completely honest with you guys, full disclosure, I hate shorting the S&P. That was a long time for me to be short. It was tough. I mean, I knew that we had the signal with the Fed internals, but now that the Fed internals have changed into a buy, now that the Fed juice has changed into a buy, now that we see that the banks can turn in the same week, 5 days later, you start with a rate hike and then quantitative easing in the same week. You are not safe being short, in my opinion, on this market.
Yeah.
So this really changed how I started to look at this. And I said, you know what? It was a nice run. We had a big short. It's time to start thinking about this a little different. And so the key with this is to understand what is the message that they were sending to us. The credit markets are damaged. Okay? It's not just a little pension fund. They try to make it sound like that. It's not. It's more. The repo markets are a mess in England. In Japan, the bond didn't trade for 4 days. So when we think about inflation, everybody thinks about interest rate hikes, but we have to also understand that these credit markets have to be able to function properly. And so I think the Fed's going to be forced to make a compromise between properly functioning credit markets and inflation. And so at some point, I think there's going to have to be some type of a compromise. And I think we saw that first crack. We saw the Bank of England blink. They blinked. They were playing a game of chicken, and they blinked, and they started QE. So what I think, and we saw the Bank of Canada get more dovish in their last meeting. I think this is coming down the road for the United States. I think it is. So that's kind of my backdrop here. Let's talk about the election for a second. So election seasonal. So typically these markets rally through the elections when things become more certain, and then they rally through the elections. Now, we have some uncertainty. We had, instead of the red wave, we had the red fizzle. So things are still kind of, it's not really certain right now. This Georgia runoff could go into January. So we still kind of have this uncertainty, but this rally tends to go through year 3 of the presidential cycle through April. So there's the potential for this to continue climbing because we have the support now, starting to get the support of the Fed, because we're starting to see these signs now. Even though they're talking tough, we saw them crack. Okay, we saw the Bank of England crack. That's a warning sign to the bears that it's not safe to be short on this thing. So this is just my perspective, and I'm just telling you this is how I look at it. And the Fed use has been a very, very, very accurate guide for us since 2009 to track where this S&P is going long term. And so, like I said, that was a long time to be short, but I think I am personally not comfortable being short anymore because I see what they can come in and do in a week. And if things get bad in the credit markets, they will step in and take action. And they can raise rates 1 week, and the next week they can start QE. And so to me, that changes the outcome. Okay, let's talk about the election here. Oh, we'll talk about this when we get back.
Let's pay a few bills, then we'll talk about the election. We'll be right back, folks, with the Wolf Trader, Shane Smolian.com. We'll be right back. WolfTrader.com. Sorry, Shane.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. We're talking with Shane Smolian, thewolftrader.com. Go ahead, my friend.
Thank you, Larry. All right, so I want to put a quote here from the newsletter. So I said in the newsletter, I was talking about this eclipse being over the election. There's hard Uranus activity with the sun, with Mercury. So I said, the idea is, the question we need to ask ourselves is, what is the unexpected event or unexpected outcome of this election? So this lunar eclipse with the hard aspect suggests something unexpected will occur. I think the unexpected event that nobody really thought would occur was that the red wave was more like a red ripple. So, it still could happen that the Republicans could gain the House and even possibly the Senate, but it's not as certain now. So the markets obviously don't like as much uncertainty. Now, this is a chart that is very important because this is representing, these are the Fed internals here on this chart. And so essentially what's happening now is the Fed is starting to lend a lot more support to this market. So behind the scenes, this is starting to ramp up. And so when I'm looking for the market to have some power behind it to get going, you definitely want to see this. And we've seen this asleep since July of 2021. This is the first time we're starting to wake up here. And so ultimately, long term, I say the bear market may be over. It's very possible that these are the lows here. Now, it still could go down and try to challenge that. But as the Fed starts to lend more support here behind the scenes, it's going to be harder and harder for this market to go down, because this is really, from what I've seen since 2009, this is the driving force, and this is my best forecasting tool for the S&P 500. So we're starting to see this build. This is another chart here where you can see that the Fed internals here in purple, this goes into a buy, first time since 2021. Fed juice goes into a buy. And so we have these little quad lunar cycles here, but we're still generally in a positive direction here. And in general, I think that that's probably going to continue here with this S&P. As long as we're getting some positive support there from the Fed, I think there's a good chance of this going forward. So I had talked before about the geomagnetic activity, like the importance of these storms, right, that come off. So this is the S&P intraday, and you can see over here, the last major peak here, we had a full moon perigee, but we also had a G3 geomagnetic storm here. I do not see any of these storms right now forming on the S&P. So still pretty bullish here. Even though we're getting a pullback today, I still think overall I'm feeling more bullish than I was before, that's for sure, on this S&P. So I just wanted to kind of put that out there. This is the geomagnetic activity that we look at. I don't see any storms coming here, so this is still generally looking pretty good. Now, very quickly, Apple. I know you've been talking about Apple and how it looks very bearish to you, but what I want to do is I want to zoom out a little bit here. So I want to take like a 10,000-foot view of Apple. I know this price action in recent days looks kind of sluggish, but let's take a look here. And this is something that I always tell people: when you're at a bear market bottom, one of the things that you want to look for is a positive divergence. So the chart at the top here is Apple. This is 2009. And so this is Apple up here. You can see. So what happened here was, down here we have the S&P 500. You can see at these March lows down here, the S&P was still pushing down, but Apple was actually going lateral to building here. The same thing was true with Google. And so these are the times where you want to look for these divergences in powerful stocks, right? And then, of course, the Fed starts with the Fed juice. This was when QE started back in 2009. But these were the lows. And I think a lot of people were able to be on board with these lows. But I just want to point out, even though on the short term, like you're pointing out, that the charts look sluggish, we have a similar situation now. So this is the chart now that we have. This is the S&P 500 down here. This is Apple up here. And I do just want to put this in people's consciousness that we have a positive divergence forming again. You have Apple, and even though it's been kind of choppy and sluggish into here, like you're pointing out, compared to the S&P on the same period, that's a positive divergence. So, these are some signs that we're starting to see here that if this thing can get going, Apple did not want to go down with the S&P. Okay, it was very strong this whole time. Even during COVID, it did not decline nearly as much as the S&P did. So there's some signs. I know there's, these divergences can go on for a long time and months and months and months, but I just want to point this out to people that we are starting to see this type of activity occur. And so I just want to point this out. Do we have time to talk about Bitcoin?
Yes, we do, my friend. We got more time, so please keep it up.
Okay, so this one's kind of a fun thing to look at. When I saw the eclipse and I saw FTX, and by the way, I'm going to the FTX arena this week to see the Heat play, so hopefully it'll still be named FTX. But this, I was like, of all the weeks, right? This is so interesting. This company was founded May 8th of 2019, and so I highlighted this. This is Wikipedia. There's a liquidity crunch on November the 8th, right? This is the lunar eclipse. And so it was founded in this time. So what does that mean? Well, if we look at the chart here, this is the actual natal chart. This is super, super cool. I knew this had to be on the eclipse, right, when this happened. But we had the company here. This is the company here, 17 degrees. You see Uranus here with the sun. Now, what does that mean in astrology? What does that mean? What should it mean? Well, let's talk about this. So the natal chart was exactly on the eclipse. And so the eclipse involves Uranus. So Uranus is sudden, and it also rules things that are sudden and disruptions, okay? The opposition is partnerships. Now, we also have a Mars retrograde, which is people quitting. I don't want to take any risk. I don't have an appetite for, and things like fizzle out. Like if you like a fireworks, it just fizzles out. It doesn't go. So what happens? So the investors suddenly quit. So suddenly is the Uranus, quit is the Mars retrograde, quit the company, and a new partnership with the opposition with Binance was formed. So this played out exactly as the astrology said it should. It's absolutely crazy when you think about that. And I would also put in here too with the election that it was an unexpected outcome, and the Mars retrograde, it was just kind of like the red fizzle, right? It wasn't the red wave everybody thought. It was just kind of like you light the firework and it's a dud, right? That's kind of what the election was. And so I think both of these, I thought that was just a pretty cool thing to kind of throw in there. But let's talk about Bitcoin for a second here. I have a lot of signals that we look at with Bitcoin. Now, at this point, based upon what I've seen now with the central banks, I'm more bullish on Bitcoin. I think this is a temporary thing. I was bearish on Bitcoin when I didn't see any signs that the Fed was going to let up. I was bearish on Bitcoin down to 10,000. I'm no longer bearish on Bitcoin. I think this is a hiccup. This is largely due to the Uranus transit. So let's talk about this for a second. I have these red arrows here. This is the Fed juice. Now, the Fed juice was in a sell, and it, along with the quad lunar cycle, was in a sell, and this goes into a dip. But yesterday, it does go into a buy on the Fed juice, and on the 11th, on November the 11th, which is just a couple days away, this is going to go into a buy. I think Bitcoin is going to survive. I think it's going to be fine. I think this was just kind of a collateral damage deal, and I'm bullish on Bitcoin going forward. I think it's going to run with the S&P, or it has the potential to. If the S&P can get going, I think Bitcoin can get going here. And I feel stronger about Bitcoin at this point than I do gold. I know gold got really excited because people have to remember something here. Gold and Bitcoin, they're rivals, right? So a lot of times, not always, but a lot of times when one goes down, the other goes up, right? And so we saw this reaction on gold. But I do think that Bitcoin, think about Coinbase was just adopted by Google. So think about that for a second.
Wow. Hey, stay with us, Shane, for one more segment. Tell the folks how they can reach you. 877-927-6648. Billy Ray Valentine, Shane Smolian, thewolftrader.com. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back talking with Shane Smolian, wolftrader.com. Shane, you really surprised me today when you talk about, you changed your environment in stocks, and I can certainly see and understand that. So we're certainly going to be watching you on this. Now, tell the folks how they can reach you.
Absolutely. So we do a webinar. We'll do one this Saturday. We haven't done one in a few weeks, but it's on YouTube. You can come check it out. You can also come to the website, wolftraderfutures.com, and you can write me an email, shane@wolftraderfutures.com. And so come by the YouTube channel, check it out, Wolf Trader Futures this Saturday. What I'll probably do is expand upon what we talked about today. We've taken a few weeks off here, but I'm going to be coming back talking about S&P and Bitcoin. And again, I feel much more positive about S&P. I still feel positive about Bitcoin, and I don't feel horrible about gold. I just think Bitcoin is going to do better. I think it's going to go with the S&P again, and I think you're going to see some kind of a
that's a revelation, my friend. I know somebody else that feels the same way on that, so that's going to be really interesting. Anyway, it's really good to have you back. So if something pops up in between, between now and the next 3 or 4 weeks that we have you on, please let us know and we'll have you back on, because your work is really splendid and we like to see what you're looking at. So it was really fun today to hear about the stock market and Bitcoin. And gold. So that was really great information. So thanks for joining us today.
Thank you, Larry. Thanks, everybody. Have a great day.
You bet. Okay, Shane Smolian, wolftrader.com. Remember, our guest tomorrow will be Tim Boss, Financial Cycles Weekly. Friday, we will have Stan Harley on, and then opening next week, we will have Peter Leides will be back with us, and I'm hoping to get Larry Williams back with us too here in the next few weeks. He's traveling right now, so it's a little difficult, but as soon as that's over, we'll be able to have him on. So live every day in an attitude of gratitude, and may God bless. And be sure to vote early and vote often. But that's too late now. We've already done that. See you on the flip side, folks. May God bless.